It is recording all this. Right. Oh, the Open Door podcast, Graham. So, this has not started yet. That was just a sketch. Right, let's get into it. So, hello, dear friends, potential mortgage borrowers, anyone listening. If you want to know anything and everything about mortgage affordability and calculating how much you can borrow, this is the episode for you. We're going to be talking about some very important things that you will need to know. I encourage you all to listen to the whole episode, but for those of you who have got stuff to do with your life, a bit more interested in listening to me and Graham drone on for a bit, there is a few stats at the start, and then we'll go through a 60-second overview. You get your teeth into it. And then anyone else who wants to hang around and listen to us chat for 20 minutes about mortgages, please do so. Quick introductions. I am joined by one of the most decorated experts known to man, Graham. Hello, Graham. Aside from being devilishly handsome with his hair, they put a lot of time into that. I think incredibly good musician. And actually, his band recorded the theme music that we use for the podcast. So thanks for that, Graham. Just before you say anything, to be really clear, if your agent's listening as well, and the lovely people at PRS, we are not paying you a penny for the music that's being recorded on there. Graham, award-winning broker, worked with us for 8 years. How long you worked with us now?
Yeah, it's got to be getting on for 8 years, surely. Yeah,
long time.
8 wonderful years.
Sentence. Having you've got your broker scout badges in all sorts of expertise now.
Oh, yeah.
Helping anybody get a mortgage, pretty much. Buy-to-lets, bad credit, self-employed, income stretchers, which is what we're talking about today, thankfully.
Exactly. Yeah, all of that. Yeah.
So you might find yourself, if you listen to this, lucky enough to be working with Graham at some point, if you make an inquiry, because you are active, still working with us now. Graham, I did some stats. How many customers of ours do you think you've helped in the last?
Oh, wow! And you know this, do you?
Yeah, I've done my research. Yeah.
Oh, wow! Oh, God, I wouldn't have a clue, but I'm dying to know. That'd be really interesting to know.
So, did you take any today or yesterday?
Yeah.
How many did you help with yesterday?
I think it was 3 yesterday.
3. Okay, so as of the day before yesterday, it was 3,090. So you've helped 3,096 customers of online mortgage advisors.
Wow!
Would you believe?
That's amazing. That's really cool. Yeah.
So I went a bit further with the research, Graham. I asked ChatGPT a few questions about 3,093. If you laid all those people in a row, head to toe down, it would be the same distance as the Sydney Opera House to the bridge in Sydney.
Oh, wow.
Or Buckingham Palace to Tower Bridge. And we're in Nottingham. So that's the castle to Woollerton Hall, if you laid them all down in a row.
Yeah, that's a hell of a walk.
5 kilometres of customers you've helped.
5.
If you've ever heard it measured like that.
People,
another way of measuring it, if you gave all of those people 2 hours of your life, you could have listened to your song Answers 87,000 times.
Wow.
I know what I prefer to do. So that is probably the weirdest introduction I've ever given. Graham Turner, everybody. I'm Pete, one of the owners here at OMA. I am a mortgage evangelist, and I just bloody love them, Graham, as I know you do too. For those of you who find yourself listening to this for the first time, visiting our website for the first time maybe, OMA is the biggest and best mortgage website in existence. But I'll probably find myself plugging ourselves harder later. Let's get on with it. So in this episode, we are going to be talking about mortgage affordability to help people understand what they can borrow, how it works, why is it so bloody hard to navigate, and the main areas we're going to cover. So why lenders will offer the same borrower different amounts, why is all lenders different, why do they not all just agree to lend the same amount, how lenders assess different people's affordability, so what are the things that they're considering, different income types and things like that, how debt and other payments impact what you borrow, how the average person might improve their affordability or borrow more money, And as always, at the end, we're going to answer some crazy questions from customers who've sent us some voice notes about it. So let's start off with some stats before we get into it. I'm going to wow you here, Graham.
Go on.
Again, as you know, our mission is to help 1 million people get the right advice. As of, well, I say today, it was yesterday I did the numbers. How many people do you think we've helped in total?
And the target's 1 million. Oof.
Oh, I've set the bar there now. I'll give you a clue in that, haven't I? Go on. How many do you think?
I reckon hundreds of thousands.
It is hundreds of thousands. It is hundreds of thousands. 510,179 customers. And actually, we don't include phone calls in some of that data. So it's probably closer to 600,000. But let's be modest. Let's just say 510. So quick question. How many, I've done some research into, how many of those people do you think were looking to maximize what they can borrow?
I imagine it will be a fair chunk. Half? Trying to
it is. Well, a lot of people want to know what they can get up to. That's probably everybody. But specifically for who wanted to stretch because they'd come in and they'd not been able to borrow enough. And that's why they came to us. There was 10% of people who came to the site. So 51,000. I knew it was a lot. But for anyone thinking, how the hell do we help that many people? It's a great question. The answer is, of course, our amazing mortgage network of experts. So we are really picky about who we work with. We say no to more advisors than we say yes to. And as a result of that, we've kind of refined down into quite a very good network of experts. But we're not here to plug our mate. We're here to open the door to mortgage affordability. Graham, question that I ask a lot of advisors and people in the industry is very difficult to know the answer to, for reasons I can't quite explain. How many active mortgage lenders are there in the market right now, do you think?
I think it's got to be over 100, right?
Yes, it is. So I had to go and do a load of digging. I've actually sent the FCA some messages about this to try and find out, because you got sourcing systems and they will have most lenders in them, but not all of them. There's a lot of different sources online that you can look at. On the FCA's website, for instance, nowhere does it say here's all the active mortgage lenders. There's been over 900 according to some of the research, 340 for all types of finance since the FSA back then started tracking it in 2007. And then there was an update to 300 in 2016. That's the most up-to-date information that we've got, but that includes loads of different finance types. And I've basically done it based on first charge mortgage lending and specialist lending. There's approximately 118 active lenders at the moment. So you're right. Why is that important? Every single one of them is going to calculate affordability differently. So they will all give you, if you're a customer and you earn 50 grand a year, they are all going to give you a different maximum loan amount. So it's important to know the range of brokers, of lenders that are out there and how many there are, because to give yourself the best chance, you need access to as many of them as possible, because they're all going to do it differently. If you're unlucky, you'll end up with the wrong lender. You won't be able to borrow what you need. Brokers are an important part of this as well, obviously. Any ideas, Graham, how many of the lenders in general you need a broker to get to at the moment?
Intermediary only. I reckon that's a bigger chunk than you might realise.
It is massive. So this is something we say on the site, but it's 36-ish%. So about just over a third of lenders you need a broker for. Like they physically, it is impossible as a consumer to get a mortgage with one of these lenders. So people who are listening to this, and we did a survey of customers last year to understand kind of a bit more about what they're after and whatever. And at the time, it was like 39-40% of people wanted to arrange the mortgage themselves. This is visitors to our website. If you're one of them, just know that it is impossible to be whole of market on your own, because a third of the lenders you're not able to access. Specifically, if you're looking to borrow more against your income, there's have a guess, Graham. How many lenders will lend 5 times income or more?
Out with that, I don't know. Couldn't tell you. Not many.
As of the research that we've done up till yesterday, I think it was 24.
24 lenders, right?
So it's actually, what's that as a percentage? 20% ish of the market would consider, for the right people, 5 times or more income. But each of them differ, obviously, and everything else that they accept is different. So some of them might take bad credit, some of them won't. So if you had adverse credit as well, there might be like 3 lenders for you. But if you're trying to do that yourself, you might not have access to any of them. 50% of that 24 you need a broker for. So if you're trying to borrow 5 times or more of your income, you've got 10% of the market. You need a broker to have access to more of it. So it's really important people understand that. And it's obviously why brokers exist. It's why we exist, is to make sure that you've got access to as many lenders as possible. One last stat before we get on with it, Graham. And it's, I suppose, a bit of an analogy. If you need a broker to get 1/3 of the market, you've only got access to 2/3 of the market. I mean, for me, I wouldn't get to my doctor if he only had 2/3 of the treatments available. That's kind of how I say it with brokers. We talk about it. You're going to want to have the full range of treatments, and it's no different. The cost of not getting the right advice for people is that they don't get the house that they want. They can't move. Dave and I talk about this sliding doors thing that we have with borrowers, where if you get the right advice, your life can change or not change, and it's like a fork in the road almost. You need to move to that new area to get your kid into the school or whatever, and you can't because you can't get the mortgage. Actually, there was one out there for you, you just couldn't find it. For me, it's so important, and people might not understand as well, though. Within that, let's say you want to use a broker, there's a range of brokers as well, not just in their ability and their quality to find the lender for you, but actually what they can access. And a podcast for another day probably, but there's most mortgage advisors that work in networks are limited to panels of lenders. They might have 70, 80, 90 of the market available, but not all of them. And that's also important to keep in mind. We surveyed 100 brokers at random. None of them were OMA brokers. And 66% say they help customers at higher income multiples on a monthly basis. About 40%, it was 38, do it on a weekly basis. Only 15% of all the brokers that we surveyed, so they're not, 40% are doing it weekly, most are doing it monthly, some aren't doing it at all. Of all of the brokers, only 15% of them had mortgage agencies set up with all of those specialist lenders that will do the higher multiples. So whilst they might have access, they haven't got all the access because they've not even ever used any of those lenders, never bothered setting up their agency for it. So getting the right broker is important as getting the right lender. But we're going to publish the study on that at some point, I think. Anyway, right, let's get into it. 60-second overview. This is for people who are already bored of me and you talk, well, mostly me at the moment, talking about it, and then we'll go into it a bit more detail. So 60 seconds, all you need to know about affordability. Comparison tables won't tell you this, and we'll talk about that in a minute. Big range of lender generosity. So the main things to think about are some will lend, and they have different calculations and how they work it out. It isn't always as straightforward as 4 or 5 times income, but that is, excuse me, it's a useful rule of thumb. But there's a range of generosity. You get to some lenders, they'll lend 3 times income. Some will do 6. Some might do more than that. The average you find around 3.5, 4 times. All lenders are going to look at the same income differently. So if you earn 50 grand a year and it's basic salary, everyone's going to take that. But if it's made up of commission or overtime or other elements to it, then different lenders will take some of it. Some won't include any of it. If you're self-employed, obviously opens another door on that, because that can create real complexity. Loads of brokers don't know even how to understand self-employed income. So Obviously you do, Graham, but we'll talk about that in a minute. There's loads of other factors, obviously, like credit history, deposit, property types, that narrow down the number of lenders you've got available. So if you're looking to borrow more and you've got other things in your application that make it more tricky, you're reducing the number of lenders for you. So that's also a massive factor. Competitive rates, still, even though if you're using a specialist lender or lending more, it doesn't necessarily impact the rate too much. The range of brokers is massive, obviously, and getting the right broker is incredibly important to make sure that you can maximize what you want to borrow. You want a broker who deals with this all the time and knows what they're doing, knows what lenders to go to, knows who those 24 lenders are, and can find you the best deal. So if that sounds like you've heard enough and you want to bin this podcast off now, then you can make an inquiry. Hopefully you'll be speaking to Graham about it, but we'll match you with someone who knows what they're doing. Graham, let's attempt to squirrel our way into this in a bit more detail. So first question, why won't comparison sites give you a good reflection of what you can afford? Why is it so hard to find out what you can actually borrow?
I guess the comparison sites won't necessarily know how that lender will treat your income or treat the sources of your income. They won't know the individual lender's loan to income multiple. They won't necessarily know how the lender looks at things like discretionary income, like overtime, bonus, commission. That's not necessarily taken 100% by every lender, and these sites just don't know that, and perhaps treat whatever income you would input into that the same, and it's just not the case. And that can give you a false understanding of what you think you can borrow.
I think I see like it's a rates table, really, for the most part. They do a bit of criteria filtering for you, but tends to be on what type of rate you're want rather than these are the best deals for you. Trying to find that out yourself is an absolute minefield. I agree. So why do they differ, do we think? Let's discuss it. I don't know if you'll definitely know the answer to this, and I might not, but why do you think all the lenders have different ways of working stuff out and have different levels of generosity?
So it's a tough one. I guess, there's a lot of it down to perhaps the lender's USPs, unique selling points. Is that like a particular area that they've chosen or they're able to operate in, maybe?
Because I suppose you have definitely for specialist lenders who typically will be like securitizing the loan book that they have. There's requirements from the funding lines for them to have a certain mix of different types of borrower. So in that book, they'd probably have a limit for how much 1 year self-employed people they can do, or how much customers on commission they're prepared to have in the book. That will definitely be a factor, won't it? And then USPs, I guess, that's an important point, isn't it? Because they've got to try and find their place in the market to get some business.
Exactly. And lenders' criteria can change weekly, certainly month for month to month, depending on, I guess, how things are for the lender, things are in the market. And I guess that's one of the benefits of having an expert, having an intermediary, is they will be notified of changes within the lenders, and can act and advise on the back of that. Definitely. I suppose you think about it, the levers lenders have got to pull to get more business is they drop the rates, which they probably don't want to do, or they lend to different people. So if they get known as someone who's really good at helping self-employed people, or really good at lending, they take 100% of commission or bonuses or overtime or whatever, they get business as a result of that. And if the lenders aren't considering that, they're not getting as much. So it's how they get their margins on it. Okay, so lenders assessing income differently. So if we just kick this around a little bit, how would a lender consider someone who is self-employed maybe differently to someone who's employed? So typically with a self-employed lender, this is very typically, you know, you sort of your average lender, they tend to look at your latest 2 years figures, whether that be salary and dividend, whether that be net profit as a sole trader. Some lenders even look at your retained profit within your business.
Yeah, that's a common one that we get with probably people listening to this who are in that boat, where most brokers, I mean, loads of brokers that you come across, none that work with us, thankfully, don't know how to read accounts. So you end up in a scenario where they're just looking at profit number is on sole traders, and they'll, you know, they might be told how to take salary and dividend into account, but they might not know, right, well, if you own a business and it is really profitable, let's say it's making 300 grand a year, you're only choosing to take 50 grand out, you can use that 300 grand number.
Exactly. Yeah. And, you know, a client, an applicant might not necessarily know that. They might just be basing it on the, you know, the what they actually draw down rather than what's actually available to them an affordability standpoint.
Yeah.
Another good one is lenders who may consider your latest year's figures. So if you've had, you know, an upturn in business and, you know, things are going really well, you don't necessarily want to have to average. You know, there are specialist lenders who will go off your latest year's figures.
Yeah.
They might have to check for sustainability and verification from your accountant and whatnot. But that's also a really good you know, criteria element that's available out there, which again,
I guess it make a massive difference, right? If someone's, do the maths on it now, let's say someone's earning 50, I don't know why I keep picking 50, but let's say it's 50 the latest year and 25 the year before that. So the average, why I can't do that in my head right now, I don't know. 75 is the average of that is 37.5k. So if the average typical lender would consider that borrower having 37,500 income, they times that by, let's say, 5 at the top end, that's 187,500 that you can borrow. But if you just took the most recent year, then they times it by 550, it's 250.
Yeah.
So you can borrow another like 80 grand on top by just using a lender that takes the most recent figures. Makes a massive difference.
Yeah, and then on that point, within that sort of scenario, you know, some lenders wouldn't accept a certain percentage of increase. So again,
right,
it would be, you know, obviously beneficial to reach out to somebody who knows that and who knows what they're looking at, because that could be something that might trip you up if you were aware of that sort of criteria element.
Yeah, and I've seen it loads of times. We get loads of customers come to us who have been declined by a lender through a broker who didn't know that, and they put all the app in, all the numbers stack up, they think it fits, and then the underwriter says, well, hang on a minute, this is too big a jump. Waste so much time, and it's pretty stressful as well. Okay, that's self-employment. And we've talked about different types of income. So benefits obviously can be considered. What other types of income that isn't mainstream, like basic salary, can lenders look at, and how do they look at that differently?
So obviously you've got your discretionary stuff. Bonus is a good one, because bonuses can be treated differently dependent on the frequency it's received, whether it's biannually, quarterly, annually,
whether it's guaranteed or not.
Guaranteed or not, performance based. Again, different lenders might treat that differently, the percentage that they'll take. Some might take 100, some might take 50. Commission again is another one that's treated, I guess, in the sort of similar vein to bonus, but I guess commission tends to be monthly. But again, it will vary from lender to lender to what extent they take that.
Do they average that? Do they take the most recent? Do they take the year's worth? What's on your P60? There's loads of different ways of looking at it.
Some lenders might look at your latest, you know, last 3 months. Some lenders might want your last 6 months to see what the commission's looking like. Same again with overtime, which, you know, isn't necessarily guaranteed. You know, there's one or two who do look at the discretionary income in full, but, you know, there's a whole host that don't. And I don't think, you know, your average sort of client or homeowner, house buyer might not necessarily know that.
Yeah. Well, different brokers don't know it, Graham, as well, sadly. Yeah, that's such is the market. How does debt and other payments impact what you can borrow? So
and any sort of thing that anything you got outstanding, sort of committed expenditure, obviously your advisor should be gathering that when they do their initial chat with you, and then they can build that into the affordability calculators. Obviously, it can impact what you can borrow. To a lesser extent, credit cards than loans, bank loans, personal loans.
Yeah,
they tend to be more impactful than perhaps a credit card balance. If you've got
is that because you're just paying a minimum payment on the credit card balance?
So a lender will take into account a certain percentage of that credit card balance as your monthly payment.
Yeah.
Whereas with a personal loan, that monthly payment is fixed, and it's going to be that for the duration of that loan.
Yeah.
So it tends to have more of an impact. Again, it can vary lender to lender.
Yeah, because some will take 3% of the credit card balance, some will do 5%. Yeah, there's different amounts on that as well, isn't it?
Exactly. Yeah. So yeah, anything like that obviously will have its impact. But again, if you had someone to calculate that for you, any broker should be doing an affordability calculation prior to applying to make sure it does all stack up, and there's nothing's going to trip them up down the line.
Yeah, I suppose as well, like if you're, I mean, how much of a minefield it would be to try and do it yourself. If every lender takes your income differently, every lender has a different generosity level when they've worked that out. And then if you've got debts, everyone looks at the debt differently and weights that differently on the affordability too. It's tough things to work out when you're trying to eke, like, because we've got, as we said, 10% of people wanting to get as much as they can borrow. Then that's a lot of people who are trying to maximize it, and then to navigate all of that stuff is really, really challenging. Okay.
Just to finish off that point, that criteria sphere is fluid. That can change.
Changes all the time, and it's not just affordability we're talking about, because you had other stuff in like property. Like, what's the property type? Is it a concrete property, or is it the Japanese knotweed in the garden? And you look at then like credit issues as well. What's the credit score? Have they had any problems on the file? So yeah, absolute. I mean, there's millions of data points when you add it all up. Getting it right is why you exist, Graham. How could the average person improve their affordability and borrow more?
So I guess there's 3 points to that, and the easiest would be to reach out to an expert.
Obviously,
not what they're doing.
Yeah, you specifically, I imagine.
Me specifically, yeah. And I know, obviously, that might sound obvious, but not everybody will do it. Get somebody who knows what they're talking about, knows what they're doing, knows how your specific circumstance is going to be treated. It's just so easy. It's a phone call, it's an email, Second couple are probably a bit harder, and depending on your circumstances, might not necessarily be doable. And that'll be like, I don't know, try and reduce your credit, try and reduce your outgoings. It's not necessarily doable for everybody.
Yeah.
So, mention that to your advisor. Oh, I've got £5,000 worth of credit card here. I need to factor in. So they'll bring that forward when they do the assessment for you.
Yeah. And which ones, if you've got a bit of cash to pay some off, which ones do you pay off are important there as well, aren't they? Because if you've got credit card and a loan and you can pay one of them off, which one do you pick? And then that could be factored in as well, right?
100%. And you wouldn't necessarily know what's going to impact your loan amount to the best degree.
Yeah.
Another thing, again, specific to lender, is a lot of lenders with like sort of combined household incomes. Let's say if they're over 50 grand, typically 60 grand, they offer you a higher income multiple.
Yeah.
Outside of your standard 4.5. Again, that's circumstantial, but it is something to consider if you that lender offers this increased loan to income boost.
Yeah.
LTI boost.
Yeah.
You'll know to approach them, because our combined income is this. We can get this.
Yeah. Yeah.
So,
there's some lenders now that are doing bigger multiples than we've ever seen, right? And you can get 6 in certain circumstances. for first charge mortgages, that is, and potentially more than that, depending on. Typically, though, for your higher earners that are on mega money, so because there's other private lenders that are willing to stretch beyond that into, we've seen double figures previously. So, and then if you're looking at second charges, which for anyone else here is like a second mortgage, so you've got a mortgage already, you want to borrow a bit more to do the property up or whatever. Rather than getting rid of that mortgage and getting a new one, you just add a second one on top. Second charge, secured loan, you might have heard of it. Those lenders are more generous as well, right? Typically.
Yeah, typically. Another point is probably again a bit circumstantial, well, very circumstantial, is some lenders offer you a higher income multiple based on your profession. So whether that's the lender as a whole or particular products within the lender.
Yeah,
and it tends to be things like services or NHS workers, key workers, things like that. But again, your average applicant client might not necessarily know that.
Yeah, definitely. And certainly, with some professionals who are self-employed might be treated as employed as well, and vice versa. You can, sorry, I was just crunching ice then. I didn't realise that was coming through on the microphone. I just seen it. I've got into my iced lattes.
Oh, nice. Yeah.
I'm making them at home, and a bit of ice went in my mouth.
Yeah.
Right, unprofessional of me. So, I think we've done. Is there anything else to add on affordability? I think we've covered loads of stuff there.
Yeah, I think we've covered most of it. Yeah, I think so.
So, customer questions, my favourite bit. I announced we were doing this episode. Asked for some voice notes, or people sending some messages. So I've picked a few quick fire questions to respond to. Gav is the first one. Bless him. Gav, well, I'll play it and then we'll talk about it. Graham, Gav, scaffolder. Sounds like he's changed his situation. What's going on?
Yeah, change in trading style obviously can impact. Some lenders will just treat it as the same company, whether they're averaging your income or whether they're going off your latest years, whatever their standpoint is on your income, or whereas some will treat it as a cutoff point, right? It's a brand new company, that's 1 year's. And again, Gav didn't know that, doesn't know that. So yeah, he's done well in reaching out there. So that's I guess, because you might consider that your same business, you might not necessarily know that that's going to be treated as a different entity, so to speak. And you might not know there's lenders available that treat it as a continuous thing. Yeah, so he's changed from a sole trader to limited. So the bank he's gone to has said, sorry, you need 3 years history and you've only got one. Tough. Or it might be that they're not willing to continuously look at his trading because it's not just scaffolders, that right? Anybody who's self-employed who's changed trading style can look to get approved based on their history. Just because they change trading style shouldn't make a material difference for some lenders. So, but lots of lenders would decline that. Great. Okay. Next one is James. Right. So James and his missus moving in together. Congratulations. So combined income, I've just done some quick maths, 77k combined income. So their bank said 308 and the broker said 346. So 77. The bank said 4 times income and the broker said 4.5 by the looks of it. And let me just do the maths on that again. Yeah, both said 4.5. So I imagine if they want 355 grads, is that possible? Yeah, I mean, your higher income multiple lenders will be able to get you over the line there.
385 is 5 times income, so yeah, that's possible, isn't it?
Yeah, exactly. But yeah, if they're not aware of them, or perhaps their broker doesn't have access to them.
Yeah. Okay. Interesting. We see a lot of that. I mean, it'd be interesting to know who the broker. Well, I don't want to name names and chuck him under the bus, but interesting to know why he's only come out with that. It might be though, James, that there's other factors at play that we don't know about because you've not told us. So maybe you've got some more debt, or that's infecting it, or credit issues or something limiting the number of lenders you got. We need to know a bit more information, I suppose, but on the face of it, if it's just income, then yeah, you can borrow a bit more than that. Right, next one is Shania. Sorry, Shania, if I've got your name wrong. This is Shania. So Graham, doctors earning 180 grand between them, and they've not been able to borrow enough. What can they borrow more than 900 grand?
Yeah, I mean, looking at those figures, I would say so. Yeah, with a higher income, multiple lenders that are available, I think that would be doable easily. Yeah.
So they managed to find someone who would do 5 times for them, and they need a bit more than that. I suppose, is that based on profession? Will that have an impact, or is it more just finding the right lenders, or a bit of both?
Bit of both, because obviously what we spoke about earlier, there are lenders who give you that boost dependent on your profession, and then there's products within certain lenders who give you a boost based on your profession. Yeah.
Okay, makes sense. So I guess, well, I'll put them all in touch with you, Graham. You can talk to them.
Yeah.
All right. So I think that's everything about affordability that we've got time for now. How long have we been going? I think we covered the main stuff there, Graham. Anything else to add?
No, I think we've sort of done a quite a succinct overview there. But yeah, I guess just ask the questions, get in touch.
Speak to a broker, preferably Graham. But,
preferably me, yeah.
Well, come to Online Mortgage Advisor first, and then we'll introduce you to Graham. Thanks everybody for listening. This has been the one of the most entertaining podcasts that I've ever experienced. Graz here, Graham. Anything? Do you want to plug the band while you're on the call?
Yes. Lacey Official UK.
Check them out, or just listen to the podcast theme music.
Financial advisor by day, musician by night.
Excellent. Right, cheers, Graham. Thank you ever so much for your time.
Cheers, Pete. See you.
Easy.